Hello, and welcome to Effects. This is one of my favorite days of the year. It's a time where we get to share all of the new products and upgrades that we've been working on with all of you. And we have a lot to talk about today. Today, you're going to hear from our product teams about what's next. New analytics, new AI tools, all built to help you accelerate your integrations, fight fraud, improve credit decisioning, and build better fintech products. Everything that we share today is going to be available on our website, so check it out after this. Before we get into what's next, I want to start by talking for a moment about the moment that we're in. When I talk to customers across the industry, one thing is clear. We're in the middle of a once-in-a-generation transformation, one that's as big as the introduction of the internet or the rise of mobile. AI is set to transform every aspect of our industry, rewriting what is possible. It's raising the bar across the board. Now, at the same time, fraud is up more than 20% year over year. Lenders are racing to inject real-time cash flow data into their borrowing process to help serve more borrowers more accurately. We're seeing fintech formation at the most rapid pace that we've seen in years. Every company is reevaluating their digital finance strategy. And it's all happening in the middle of economic uncertainty and rapid regulatory change. Now that's a lot. It's reshaping what it takes to succeed in financial services today. That's why we've evolved as a company. We have to help you keep pace with this new reality. We started Plaid in 2012 with the goal of helping financial services companies become more and more digital. We were fortunate to work with many of the newest startups around the time of their inception. Companies like Venmo, Robinhood, and Rocket Money have used Plaid since the early days. The simple way to describe what Plaid was at the beginning was an API for your bank account. What that means is that we're helping people connect their bank accounts simply, securely, and in real time to the fintech applications that they use every single day. Data like transaction histories, balances, income, and assets, all of the data that you find in a bank statement, and with that connection in place, you, all of our customers, have built thousands of products that have fundamentally changed the way that people manage their money. Now, that was Plaid in the early days. When we look at Plaid today, we're a very different company because three big things have changed. First, as the fintech industry have grown, so too has Plaid. Today, over 750,000 connections happen through Plaid every single day. That's 10 connections per second. That's more people signing up to apply for a loan, fund a wallet, pay a bill, or make an investment. These connections have become the foundation of the Plaid network, a network that keeps getting stronger with every new connection. As we reflected on the breadth of our network and the unique qualities of our dataset, we saw that we had the potential to do much more. A few years ago, we made a very intentional decision to shift our focus from simply building bank-linked products to building data analytics products that have helped customers solve some of the most important problems in financial services, problems like fighting fraud and improving credit scoring. That brings us to the second big change for Plaid. Plaid has moved from being a data plumbing company into a data analytics company. We've built and scaled a set of products that are only possible because of the unique depth and breadth of the data in the Plaid network. Now let me give you a few examples. Last year at Effects, we launched Meier, which is the fastest and most secure onboarding experience that we've ever built. It cut onboarding times by nearly 90%. We also built Signal, our ML-powered risk engine, which has analyzed more than $146 billion worth of transactions, helping prevent insufficient funds and unauthorized payments before they happen. We also introduced real-time cash flow insights that are more predictive than traditional data sources for thin-file or near-prime borrowers. When you combine Plaid's data with traditional credit scores, you can increase predictive accuracy by up to 25%. These are products that you can only get from Plaid. The third big shift for us is that our platform has scaled up for enterprises. While startups and our developer roots will always be core to who we are as a company, Plaid is also scaling up. Financial institutions like Citi use Plaid as an integral part of their digital strategy, both as data partners and as customers. And across industries, enterprises like Rocket, Walmart, ADP, and others are building on top of Plaid to solve key challenges in onboarding, risk, payments, lending, and more. Fintech isn't just about fintech startups anymore. As I always say, every company is a fintech company. Our goal is simple. We want to deliver trusted enterprise-grade products that scale with you, whether you're a two-person startup or a Fortune 50 company. So let's talk about why these shifts in our business matter and why they matter especially right now. Zooming out, where we sit at the center of thousands of companies across fintech, banking, lending, and beyond, the change is clear. The biggest players are going all in on data to better serve their users and grow their business. They're investing billions of dollars to accelerate user acquisition, improve underwriting, expand cross-sell, and reduce fraud, all powered by real-time, first-party financial data. The data revolution that's happening in financial services means that the companies that will grow the fastest in the next decade will be those who can best use data to help their end users. Other industries have been embracing data for years. However, financial services is finally catching up. Our goal is to deliver excellent data and analytics products to the entire industry, leveling the playing field for every company to compete and every consumer to lead a better financial life. We've built one of the largest analytics platforms in financial services. And we've built it so that you can plug in, scale fast, and stay competitive without having to rebuild your stack from scratch. On the topic of staying ahead, I'll close today by talking about AI. We are still in the very early innings of the ways that AI is impacting financial services, but the change is already starting to show. We've been investing in a range of AI-powered initiatives at Plaid. We are very soon going to ship a proprietary transaction categorization model that incorporates LLMs to continuously improve the performance of our transaction taxonomy. Next, we shipped an LLM-based document fraud detector tool to catch fake IDs like AI-generated documents. We also launched a natural language search that helps fraud analysts move faster in building our dashboards. Finally, we recently launched our MCP server, allowing developers to build Plaid integrations faster and more seamlessly within the existing AI dev tools that they're already using, such as Cursor and Windsurf. We're at the start of something really big. AI is changing the game, and data is the new edge. Plaid is the platform to help you lead, not just connecting accounts, but unlocking insights in analytics for you. Not just fighting fraud, but preventing it. Not just keeping up, but staying ahead. So thank you. Thank you for your trust, thank you for your partnership, and thank you for all you do to improve fintech and financial services. Now, over to you, Jen.
I'm excited to talk about what's always top of mind for me, how we innovate to help you grow your business. Before I get started, I wanted to say thank you for your partnership. It is truly an honor and a privilege to be building alongside all of you. Throughout today, you'll hear about AI, you'll hear about new analytics products, but at the foundation of it all is one thing, our network. As Zach mentioned, Plaid is a network that has connected around 150 million consumers to over 12,000 financial institutions and data partners, and thousands of fintech products. Today, more than 750,000 connections flow through Plaid every day to apply for loans, fund accounts, invest, and more. These consumer permission connections generate high-fidelity signals, historical account behavior, real-time user activity, device-level intelligence. We use that data to drive faster, smarter, and safer user experiences across the ecosystem. For example, we continuously track success rates and error patterns across thousands of institution integrations. When a user connects, we dynamically route them through the highest performing authentication path, automatically improving speed and completion rates. Another example is how we help you with fraud. Our fraud and risk analytics engines ingest signals from across the network, including things like device reputation, account velocity, IP movement, and identity reuse. We train models on top of that data to flag high-risk behaviors before it impacts your business. Customers use these models to block synthetic identities, detect repeat attackers, and prevent high-velocity fraud, all with the predictive insights they can't get anywhere else. As we grow our network, you get richer analytics, faster onboarding, and more intelligent product experiences out of the box. Now, let's talk about our data network. From the very beginning, our goal was simple: make it easy for anyone to connect their financial accounts to the apps and services they trust. That's why we've focused on building infrastructure that makes it easy for every consumer to connect, no matter where they bank. We're relentlessly expanding the number of financial institutions we support today, both in coverage and the kinds of data we can access. I am proud to say that we lead the industry in terms of long-tail coverage, adding hundreds of additional institutions over the last year. And we've broadened our coverage beyond traditional financial institutions to include new data sources like identity information, payroll information, and more, helping consumers to share a fuller picture of their financial lives. And of course, you need to know who your customers are before onboarding. So we're enhancing our verification tools with richer data to help identify people often missed by traditional sources, like younger consumers. The next update on coverage is a long-standing request from all of you, so I am very excited to announce our support for business bank accounts. With these new connections, we now cover over 95% of US banks that serve small to medium-sized businesses. So you can reach and serve these organizations no matter where they bank. This unlocks a critical, historically underserved segment, small to medium-sized businesses. With more reliable and structured business transaction data, you can deliver better cash flow visibility, streamlined bookkeeping, and smarter lending experiences. Check out our product launch page for more information on this. Next is data quality, because the quality of your data directly impacts the experience you deliver to your users. It's the difference between users instantly connecting to their apps or sending in a support ticket when something breaks. We've been investing deeply to make those frustrating moments disappear. One highlight here is our new AI agent first responders. We've built agentic workflows to detect and triage broken bank integrations automatically, letting our engineers respond 20 times faster and dramatically improving reliability for you and your users. Lastly, the network is awesome, but only awesome if it's easy for you and your team to access and use. To do this, we're constantly working to meet you however and wherever you work. To address the how, we know that many of you work with technology platform providers today across digital banking, lending, prop tech, online gaming, payments, and more. You've asked us to more directly integrate with the partners you are already working with so you can easily integrate with us. I'm proud to say that growing our partner ecosystem is one of our key focuses this year, and we've more than doubled our ecosystem over the last year. A key highlight in this area is our recently announced partnership with Experian. Together with Experian, we're helping lenders make more informed credit decisions by incorporating real-time cash flow data and analytics alongside credit data. And to meet you where you work, we're focused on helping you expand internationally. We service the US, Canada, the UK, and 19 other countries throughout Europe, including the Nordics. We also recently added coverage for Austria and Poland. So Guten Tag and Vitam to you all. Major companies with global footprints like Affirm, MoneyGram, Western Union, and more are all using Plaid to power their transatlantic services. So we've talked about data, about coverage, about scale. But what it really comes down to is this. Every time you build with Plaid, the Plaid network gets smarter and stronger. And when the network gets stronger, everyone benefits. We turn that data into real-time insights and analytics that help you acquire more users while managing risk. Whether you're looking to supercharge onboarding or meaningfully improve decisioning in lending and payments, we want to give you not just the pipes to build the connections, but the analytics to layer on top to power intelligence. That is what Plaid is all about. Up next, you'll hear from our teams behind our new credit and fraud analytics products.
As we connected hundreds of millions of people to their financial accounts, we started noticing something powerful. Patterns. Not just your pet becomes a motivational speaker the second you're on a work call patterns. Systemic ones, hidden ones, the kind that you only catch when you sit at the center of a network as big and connected as ours. One of those patterns jumped out when we were helping a customer navigate a massive fraud spike tied to a promo offer. When we cross-referenced their fraud reports with our network view, looking at things like an influx of recently opened bank accounts and account takeover reports, we uncovered something that they couldn't see on their own. A coordinated fraud operation hiding in plain sight. This triggered our aha moment about the incredible potential within our network view. We realized our network isn't just good for enabling financial services, it can actually help our customers detect fraud in a way that nothing else can. So we got to work compiling fraud signals from across Plaid and started building a one-of-a-kind fraud solution. We call it Plaid Protect. Not just a rule engine, not just another score. A real-time fraud intelligence system designed to catch what others miss because it connects what others can't. At its core, Plaid Protect is two things. One, it's a cutting-edge fraud model built on top of a rich set of network data. And two, it's a best-in-class investigative toolkit designed for actual fraud teams, not just dashboards for show. let's start with the model.
We're calling it the Trust Index, and the first model version is TI1.
It's an adaptive risk engine built from over 10,000 attributes, where we choose the most predictive ones based on your specific fraud scenarios. It's fed by multiple data streams, including network intelligence, historical bank account risk, consortium feedback, and ID verification data. First, let's talk about network intelligence. Every day, we see user interactions across over 7,000 apps, ranging from startups to the Fortune 50. And because we've seen billions of devices, we know if they're being used at high velocity to link bank accounts or verify identities, how many deleted financial accounts they're associated with, and if they've failed numerous bank login attempts. This gives us pattern recognition capacity that no single financial services company can match. Next, with historical bank account risk, we can see if a user's account was recently closed, maybe it was just opened a week ago, or if there are suspicious changes to phone numbers or emails on someone's bank account. And that's just the beginning. We surface a rich set of highly predictive attributes. Then there's consortium feedback. We incorporate fraud alerts shared by both businesses and directly from consumers. Say a bank flags an account takeover attempt, or a mortgage lender detects synthetic identity behavior. We can then surface that risk to a payments platform or a property management company seconds later. And finally, we look at a whole host of ID verification data for visibility into things like if a user's PII matches authoritative sources, someone's using emulators or residential proxies, if they've tried to send us a deepfake liveness attempt, or if their SSN looks synthetically generated. All of this contributes to the Trust Index. It's the trusted checkpoint you rely on before you let a user do anything important, from onboarding to extending a loan. And it's designed to tackle tough fraud, like stolen and synthetic identities, first-party fraud, and ATOs. That's a look at the intelligence engine powering Plaid Protect. Now, let's dive into how you actually use that intelligence. Yes, it helps with your final onboarding decision, but its real power actually starts much earlier. Protect starts scoring fraud risk the moment a device touches your onboarding flow, generating a meaningful risk signal before the user even types in their name. How? Because most devices aren't new to us. With more than 1 in 2 US individuals having used Plaid, we've interacted with most devices, and we can link that data to historical sessions we've captured across thousands of apps as a means to prevent fraud. So, before you even collect the user's name, Protect gives you an initial risk assessment right at the start of onboarding. That's more data with fewer inputs. As you collect more data over time, phone number, email, name, SSN, the Trust Index updates constantly, refining the risk picture and helping you apply the right amount of friction, like selfie checks and ID documents, at the right time. That means better conversion too. With smarter signals, you can confidently let more good users in while keeping fraudsters out. Case in point, analyzing results with an early customer showed that intelligently stepping up just 5% of users could have led to catching nearly 40% of first-party fraud that got through their existing defenses. That is a major fraud win with minimal user impact. And Protect keeps monitoring. If a user's risk profile changes post-onboarding, you'll know. We'll proactively send you webhooks if there's new fraud-related events for your users, because fraud doesn't end at sign-up. Now, let's talk about the part your team will use every day, the toolkit. Let's jump into a quick demo focusing on the Explore view. Think of it as your personal search engine for fraud. All right, so every event, new devices, IDV instances, bank links, it's all logged here. By default, you're seeing the full stream of activity across your platform, with the Trust Index score helping you spot potential issues. Up top, we see the event frequency. Let's look at the last few days. Aha, look here. See this pattern? There was an initial spike of risky events, but notice how it didn't just drop back down. Instead, it settled into a new, elevated level of medium risk activity. That's not noise. That's fraudsters finding a new attack vector and hitting it over and over. That's exactly the kind of persistent threat that we need to investigate and write a rule for to plug a hole before it causes more damage. Let's investigate. Let's open one of these medium risk sessions from that period. Looking at this session, what stands out? Right here, we see 2 interesting flags contributing to the risk score. This user linked a high number of bank accounts recently, and look at the phone details. It's associated with very few services and has a tenure of less than a month, suggesting it might be a burner phone. So, our hypothesis is that this spike might be driven by attackers using burner phones to link a lot of new accounts rapidly. With Protect, we can test that instantly. Let's jump into the Explore view. The best part? You can just type what you know. No need to know field names or special syntax. I'll type users who linked more than 3 accounts last week and have a phone tenure less than 1 month. It thinks, builds the query, and bingo. Look how that narrows it down. The chart shows the spike clearly, and we've filtered out most of the low-risk traffic by combining those conditions. We've isolated the pattern. Now, here's one of the best parts. Searching is rule creation. Most companies are stuck analyzing data in one place, then manually porting those insights into a separate fraud rule engine. This adds overhead, increases time to action, and creates room for error. With Protect, those 2 steps collapse into one. You analyze and operationalize in a single motion. We just take this successful search, capture it, and tell it what to do with the traffic, then deploy the rule. It's live immediately. And that's the core loop. See a pattern and explore, quickly investigate a representative case to form a hypothesis, use search to isolate it, and instantly turn that insight into a live rule. No handoffs, no switching tools, just straight from insight to action. That's the power of Plaid Protect, combining cutting-edge fraud intelligence with best-in-class tools designed by people who work with fraud every day. And what you've seen is just a glimpse. We'll be doing a deep dive session on this, so make sure to check it out if you want to learn more. Plaid Protect gives you insights you've never seen before and the power to act on them fast. It protects your platform, earns trust with genuine users, and streamlines your entire fraud response. By tapping into the full strength of the Plaid network, Protect helps you catch risk earlier, respond faster, and ultimately build a safer digital economy for everyone. If you're interested in learning more, reach out to your account manager directly to join the beta. Thank you.
I've spent more than a decade in lending, building products that drive change in the industry. Like at SoFi, where we reimagined student loans, and at Figure, where we built the first fully digital HELOC product. These products changed the status quo and delivered a loan experience that was unparalleled in the market. And as I look towards the future of lending, my biggest question is, how do you build the next truly innovative lending product if you're still using the same credit data? Traditional credit scores are built on a history of loan payments. But I want to know why someone needs a loan in the first place. Did they lose their job? Did they have a large unexpected expense? Are they just spending too much on vacations? That's the story that can be told with cash flow data. It is a reflection of what's happening right now in someone's financial life. It's why we're helping lenders access real-time cash flow data directly from bank accounts with minimal friction and out-of-the-box analytics so they can better predict ability to pay and deliver higher quality loans. That's the holy grail of lending. Real-time data and predictive insights for instant decisioning. Today, we're going to show you how that is all possible with new updates to our credit solutions, plus partner integrations to expand access to cash flow data. First, let's talk about our credit solutions, starting with assets and income verification. Borrowers used to manually collect bank statements and W-2s for lenders to review, a slow and tedious process. We brought our account linking solution to lenders so they could digitally verify information seamlessly. Take Zillow Home Loans. They're pre-approving loans 29% faster because of our verification solution. And they're not alone. Plaid has powered over 45 million verifications, boosting speed and efficiency for hundreds of lenders, including Opportune, Upstart, ULend, and Rocket Mortgage. But verification is just one step in the loan lifecycle. That's why we're expanding our product offering and launched Consumer Report through Plaid's consumer reporting agency. In addition to verification, Consumer Report delivers real-time data and analytics to help lenders with decisioning. To more accurately assess risk, lenders need ready-made insights and attributes that they can easily incorporate into their scoring models. Lenders can now access hundreds of new cash flow and network attributes from Consumer Report. These insights are powered by proprietary machine learning models that enrich 500 million transactions daily across our network. Let's walk through a few. We've added new primary account indicators, so you're seeing a borrower's full financial picture. There's also loan payment activity and expense to income ratios, and a count of NSF fees and account balance trends to detect financial distress before it appears on a credit report. Last but not least, let's talk about network attributes. Plaid provides a real-time view of a borrower's account connection activity across more than 7,000 financial apps. These are unique attributes that you can only get from Plaid, like connections to personal finance management and credit building apps, which can signal strong financial habits, while connections to lending and cash advance apps can signal potential loan stacking behavior or over-reliance on short-term credit. These attributes show how credit risk is changing based on a borrower's current behavior, which can enhance your internal scoring models for better risk assessment. And we've pressure tested our attributes to understand how they can impact lending decisions. Our analysis shows that using cash flow and network attributes alongside traditional credit data can boost predictive performance of scoring by up to 25% for targeted risk tiers, which can help lenders increase loan volume, reduce losses, and improve profitability. Now, let's see them in action. Imagine you're a lender evaluating two borrowers, Jake and Amy. On paper, they look similar. Both have a 680 credit score, which means they generally have good credit. For most lenders, that's enough to make a loan offer. But now, imagine you're using Plaid to dig deeper with data from their bank accounts. First, income. Jake's income is highly variable because he just lost his job. Amy's income is stable. Next, account balances and credit usage. Jake's checking account balance is low, and he only pays the minimum on his credit card. Amy maintains a healthy balance and pays off her credit card every month. Finally, financial behaviors. Jake recently connected his bank account to several lending apps, an early sign of financial strain, while Amy uses personal finance apps to manage her budget. This is what traditional underwriting misses, the real context behind someone's financial health that you can only see with cash flow data. Now, I'm going to shift gears a little bit. Insights and analytics are just one part of the equation. The real challenge with cash flow underwriting is reducing friction. To unlock its full value, you need access to the data from the very start of the borrower's application journey. You need user experiences that feel fast and frictionless, while still being secure and reliable, just like a soft credit pull. That's why we've launched a new onboarding experience last year. Now, when people save their information with Plaid, they can instantly share their cash flow, income, and identity data with you by just entering their phone number. Plaid's customers are already seeing a conversion lift of up to 25% and a significant reduction in the time it takes to onboard a user. And now this experience is available for Consumer Report. So lenders can get cash flow data and use it alongside a credit score at the start of their application process without adding friction. Now, I want to close on one key point. It's not just about the data. It's also about meeting lenders where they are today and making data much easier for you to use. One of the most powerful ways we're doing that is through our partner ecosystem. I'm excited to announce new integrations that expand access to cash flow data. By integrating with leading credit analytics, technology, and software providers, more lenders can use cash flow data without rebuilding their workflow. For example, we're embedding Plaid's secure account linking experience into lending software platforms to streamline access to cash flow data and make verifications easier than ever. Because tools should fit how you work and help you move even faster from there. We're just getting started here, And I'm excited to work with many of you to shape the future of lending. Stay tuned. There's more to come. Now I'm excited to welcome our next speaker, Varun Krishna, CEO of Rocket, who's here to talk with Zach about how Rocket is reinventing the homeownership experience. Over to you, Zach.
Hello and welcome. We're here today at Rocket headquarters in Detroit with the Rocket CEO, Varun.
Hi.
Thank you so much for being here.
Thanks for having me, Zach.
The energy of the company and the city around it is electric. What is it that makes the culture of Rocket so unique, and how is it so connected to the city around us?
Yeah, I would say Rocket is a very special place. And that culture and energy, I would say, existed long before I got here. So I've been in the role for about 20 months now. And I think what's unique about Rocket is it is a great example of a company whose internal culture, focus on community, matches its vision and mission for the business that we do. And that business is home ownership. And so Rocket has been around for almost 40 years. We'll be 40 this year. So that's a legacy. We moved down to Detroit in 2010. We relocated our headquarters. We've spent about $200 million in community and philanthropic efforts since then. And it really speaks to our core mission, which is to help everyone home. That is our mission statement. And it's really focused on this idea of creating safe, sustainable home ownership for everybody. A lot of what makes Rocket, I think, truly special is just the investment in our culture. As you mentioned, we have a set of values that we call our isms. They reflect who we are, how we act, how we show up. And there are 16 of them. And I think what's really unique about Rocket is that, our value system is not just something we put on a wall and just refer to. This is very deeply tied into the language of how team members interact with each other. Some of our isms are examples like "we are the they," which is a statement about extreme ownership. "We'll figure it out," which is a statement towards solution centricity. "Do the right thing," which is about putting the client first. And these are words and phrases that you will hear just walking the halls, being on a mortgage production floor or interacting with the servicing team, is that we use our isms in day-to-day language. And I think that really speaks to the strength of our culture.
That's amazing. Just walking around the halls here, you see books published on the isms, you see them written on the walls, you hear people talking about them everywhere. So clearly that's pervasive. So you joined Rocket in 2023. You've been here just about 2 years, and you joined from Intuit. If I remember correctly, you were living in sunny Southern California, and then you decided to move your entire family to Detroit to take the CEO role. What is it that drew you in? What is it that made you want to take this role at Rocket?
Yeah, I think it was many things. I think I've been sort of tooling around in the fintech world for some time. I was at PayPal working on payment stuff, and then at Intuit, I primarily focused on sort of tax and credit. And I think a little bit of me is just motivated by wanting to build a better financial system and feeling like, many aspects of the system are not really designed to benefit the consumer, or in our case, the client. And so I sort of meandered into the tax world, got a chance to look at a lot of data. And I think from tax, really what motivated me to come to Rocket was housing, the mission of housing. In some ways, I feel like housing is like the last frontier of fintech, right? It's the bedrock of the American dream. It's 20% of the GDP. It's a huge market. I saw a company that had, a lot of data, and I really felt like to progress in the AI driven world, better data equals better models equal better experiences. And so, what attracted me fundamentally was, big unsolved problem, a company sitting on, a lot of proprietary data that could be used to create new disruptive experiences. And then the most important thing, I think, for me was just the culture. As we talked about earlier, it's a company that has a loving, empathetic, kind culture, and yet it is also a company that is competitive and likes to win. And the mortgage space is a competitive space. So I just saw a lot of opportunity for growth. I fell in love with the team, the leadership team in particular, and I haven't looked back.
Rocket and Plaid share a board member in Alex Rampell. And I remember hearing you and Alex Rampell give a talk about a year ago where you were talking about how AI was going to revolutionize the mortgage industry. How's it going? What's happening? And where's the future going to be with AI?
Yeah. I think, I think it's anyone's guess as to where this is all going. But I will say that, I think Rocket and our business is a very natural fit for benefiting from automation, personalization, and efficiency. when you think about the homeownership journey, and we'll exclude kind of the home search experience and the servicing experience. We've announced some news recently in the inorganic space there. But even if you look at just the home financing experience, like the bread and butter mortgage experience, I mean, you speak to someone on the phone, you get qualified for financial products, you provide data and documents as verification. That goes through a workflow. It then goes through things like underwriting. You go through title insurance. And so it's a very deterministic exchange of data with a human component that really provides empathy and support, because it's such an emotional decision. And so we think of AI as really applying across the board to the entirety of that experience, right? Automating the process by which you provide your data and documents, providing coaching for someone you're talking to on the phone so that they can provide better empathetic support, that they can meet your needs, that they can really personalize the experience for you. Simplifying the process of underwriting, going from, a task that requires many people and many manual steps to something that can be more automated and verified based on algorithmic concepts. And so, moving money, right? And so I think fundamentally for us, we're building a platform that extends through every part of that experience, from the document provision process and extraction and classification and categorization, through to the telephony systems that integrate with our mortgage bankers and the clients, through to the underwriting process, and then ultimately, into servicing, where you have a long-term relationship with the client. And we've seen some great benefits. I think we're on track this year to save our team members 1 million hours. And that is a serious productivity enhancement, which allows us to focus on the business of growing our business.
I love the concept that you say of once you have the data, you can then build amazing experiences on top of it. You can use AI and other tools to do so. If you could snap your fingers and modernize the consumer lending experience, what would you change?
Yeah, it's funny. I think I would get rid of the word experience, right? Like, I think the best experience is no experience at all, right? And I think one of the things that are interesting to me about fintech products and services in general, mortgage being maybe one of the most intense examples, is that they require work, right? They require drudgery. They require waiting and wondering, providing data, knowing where you stand, problems of confidence, of certainty, of value. And so, I envision a world where, an agentic AI or an AI-driven platform is doing the work for you, right? Like, why couldn't consumers be underwritten in real time, right? Why couldn't the deterministic exchange of data and the pre-qualification happen, instantly? And so a lot of it for me is just, you have a lot of systems that are legacy that connect to each other. And that's part of the reason we want to create a more consolidated, integrated experience, because a lot of the time you're providing the same data to 3 or 4 different systems, but the consumer or the mortgage processor or the lender is doing all the work, right? And so, to me, I think a significant advancement in automation, experience that is a little more invisible, behind the background, that just says, hey, Zach, you see this home, you qualify, you can have it right now with the click of one button. And so that's the kind of world that I want us to get toward. I think the process of buying a home is painful, it's lengthy, it's complicated. And then from a mathematical perspective, it's sort of expensive, it's complicated, and it's filled with friction. And so the more friction we can remove and the more seamless we can make the experience, it should really feel like no experience at all.
We at Plaid talk a lot about the concept of an instant experience. So you come in, you say, hey, this is who I am, and all your data gets uploaded automatically. And that kind of unlocks this totally. Sort of like no experience loan, as you talked about.
Totally.
So for me, Rocket stands out as one of our partners that uses Plaid in so many different areas, across Rocket Money, Rocket Mortgage, a bunch of different places. How's the partnership been for you, and what would you like to see us do more or differently?
Awesome. I would say the partnership has been, I think, very productive, very trusting, and very intimate, and I think that's what you want from a partner. Is you want someone who has a shared vision and wants to work together. And in many ways, Plaid is like the data backbone of Rocket, right? And so we use Plaid in many different businesses. We use it in Rocket Mortgage to allow clients to be able to easily verify assets, which is a big part of the mortgage, journey. Rocket Money leverages it to provide insights to consumers on helping them track their spending, helping them manage their budget, helping them build better credit, and track their cash flow. And then even the Rocket Loans team also uses Plaid in order for consumers to be able to more easily qualify and provide examples of their assets and financial picture as well. And so it's been a great partnership. And I think you know me pretty well. It's all about data, right? And I think what's really interesting about the future is there's so much that we can do together if we think about the insights that exist in our combined companies' data sets. And, you and I have talked about this before, this idea of a data contribution framework that, creates a more holistic view of a consumer that can be used to create all kinds of benefits, right? Better financial experiences, better qualification, potentially a better credit system, something that really creates more fairness and equality across the world. And so I think the sky's the limit, but we're very grateful for the partnership so far.
One of the things for me that's the most interesting is at Rocket, you have an ecosystem of products that fit very nicely together. So obviously mortgage is the core. You do servicing in a big way. We've worked very closely with Rocket Money, of course, on the front end. And you've made some big news lately by announcing the acquisitions of Redfin and Mr. Cooper. What's the bigger vision? How do all these pieces fit together?
I think the way we think about it, I get asked this question a lot, are you a mortgage company? Are you a tech company? And I chuckle a little bit because technology, I would argue every company aspires to be or is a technology company. And that's more of a how than a what. And so our vision is that we want to build an integrated homeownership platform, right? And that's something that we think is the first of its kind. With respect to the inorganic news that we announced, it's really in service to a couple of key realizations. I think the first realization is that, the industry of home search and real estate, and the industry of mortgage financing, title closing, and the industry of servicing, today they exist as almost like separate verticals, but they're very interconnected. You go through a home search experience in order to get financed. Once you're financed, you end up in a servicing relationship. Through that servicing relationship, you may qualify or be eligible to be recaptured for new financial products, a new purchase, a cash out refinance. And so we had this big aha moment where we realized that these three sort of funnels are actually interconnected and they can combine to create a super funnel. And if you can create a super funnel, you can participate in more of the economics around the entire value chain. And if you do a good job with that and you leverage technology, you can create more value for the consumer. Today, like on a $400,000 home, 10% of the cost goes into fees. And a lot of those fees are repeated because you're providing data at different points to different sort of middle layers and middlemen. And so we think we can make that whole process a lot simpler. And so that was one of the theses. The other thing that we really thought about is just how do we create a more balanced business model for Rocket itself, and how do we make sure that the company can actually thrive in all kinds of market conditions? When rates are low, you obviously are very successful in driving a refinance business, but when rates are high, your servicing business continues to be a source of strength and new client acquisition. And so that's sort of the context for why we wanted to do these acquisitions. So Redfin really helps us accelerate our top of funnel strategy. It helps us build relationships. The total funnel is now, something like 62 million monthly active users that will be coming to the Rocket platform. When you look at, connecting that to the Rocket funnel, they will be able to interact with 3,000 of the best loan officers, 10,000 or, tens of thousands of mortgage brokers. And then, when you go into servicing, there's 10 million clients there in the servicing book in totality. That's 1 in 6 mortgages that you will see every month. And so the beautiful thing about that too is just the data, right? Because all of a sudden now you have theoretically almost triple the data than what Rocket's ecosystem as a standalone would have had. And then you can create a lot of experiences around a better consumer identity, better workflow, better data management, better recapture, and then ultimately pass a lot of savings onto the client with a more seamless and sort of frictionless experience. So that's kind of the thesis of how we saw the world. I mean, we also wanted to be more of an ecosystem as well. I think there's a lot of opportunity for us to build better distribution, to partner with realtors, to partner with mortgage brokers, and so just other players in the industry as well. And, the most important thing too was just the culture fit between the companies. And, we felt like I spent a lot of time with Jay Bray and Glenn Kellerman, who are the CEOs of Mr. Cooper and Redfin respectively. And they're just visionary leaders. I think we shared a common view on the future of home ownership. We wanted to win together. We felt like we could work well together. that our companies had complementary, culture, values, and passion. One conversation led to the next, and here we are.
Yeah, I love the idea of being able to sign up once with Rocket, create a profile, browse for houses, buy a house, apply for a loan, get my loan service, and then have kind of Rocket Money along the way, helping me build my financial picture.
That's right. And the Rocket Money piece also is super important here because, as you pointed out, I mean, preparation to get in the house is the equivalent of financial fitness, right? You have to have good credit, you want to have savings, you want to have good cash flow. And then once you're in a home, staying in the home is also an exercise in financial fitness, right? So that you can make your mortgage payments and handle your property taxes. And so, servicing Rocket Money, they really create, better retention for our clients as a whole as well.
All right, shifting to you for just a minute. You've always struck me as a brilliant and thoughtful, yet incredibly humble person. How has your own personal brand of leadership evolved or stayed the same as you've come into the Rocket environment?
I would say it's always an evolution. I actually feel like the further I've gone in my career, the more I realize that I have to learn. It's been very humbling in general. But I think, there are a few things that I have really embraced coming into Rocket, and the mortgage business and the homeownership business in general is a very complex business. And there are, many industry professionals and leaders at Rocket who have immersed in that for decades, right? And so the most important thing I think for me in the beginning was to really listen and to really learn, because the natural experience that many of my leaders have is just something that there's no substitute for that experience. And so a big part of the learning journey was really around building a balanced leadership team and elevating leaders who had amazing experiences within the company with leaders from the outside, and making sure that those teams and those leaders would interact with each other well, and that they would strengthen and reinforce each other. And so definitely a lot of learning that kind of went into that. And I would say learning that still continues. I think sort of one of the trickiest things about leadership is, avoiding the illusion of mastery and sort of getting to this place where your ego and your own sort of sense of self-worth kind of overtakes the leadership of an organization. And so, I really believe in a shared leadership style. I like to do things with my team. I like to make decisions together. There are moments where you have to be decisive and you have to weigh in and make sort of a ruling call. But by and large, I like to work in a way where your team wins and loses together.
It's a big testament to both you and to the Rocket culture, how well the fit has gone so far.
Thank you.
Just to wrap up, what comes next for Rocket? What are you excited for in the future?
I think we've got our hands pretty busy right now. So I think integration right now is very top of mind for us. But I think, the beauty of home ownership is it sort of is this unlimited growth potential space. And what I'm excited about is just, I just feel like we're at a really interesting precipice around evolutionary change with artificial intelligence. But what I also think is exciting is, artificial intelligence is sort of in many ways a precursor to new enabling technologies, right? And so, 3D printing, robotics, materials engineering, right? And what I think is cool about AI is not just, the automation and personalization, but really the enabling of new technologies that could make homeownership even more accessible and more sustainable. And so, I imagine a world where, technology is not just driving better models and insights and workflows, but it's actually helping us manufacture and produce homes, at a different level of scale, with a different level of value and a different sort of distribution mechanism. And so some of that may be a little bit longer term, but, I think a lot of where we're at right now is sort of building a foundation so that we can just do more in the space of homeownership.
Well, Varun, thank you so much for making the time for this. This was an awesome conversation.
Anytime.
And I look forward to many more years of partnership.
Likewise. Thank you, Zach.
Thank you for joining us today. We've covered a lot. We talked about the shifts that are happening across our industry, the increasing importance of data, the growing threat of fraud, the breakthrough impact of AI, and what it's going to take for all of us to lead in this next chapter. You saw new analytics products, a whole new generation of fraud prevention and real-time lending intelligence, and AI-powered tools built right into the workflows that you already use. And underpinning everything is the Plaid network. This network is the foundation for all of the products that we're building. The network is what allows us to give every company, no matter your size or what you do, the kind of data and insights and performance that used to be reserved only for the largest incumbents. But what makes today so exciting isn't just what we're shipping, it's what you're building. You're building better onboarding. You're building smarter underwriting. You're building safer, faster financial experiences for millions of people. Our job is to make that easier, faster, and simpler for you so that you can focus on the things that move your business forward. So thank you for your trust, thank you for your partnership, and thank you for everything that you're doing to raise the bar for consumers and businesses in financial services. We are so honored to be building alongside you.